The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, happy pre-holiday morning to everybody. July 3rd. We've got just a little less than an hour to go. Is that right? Let me see. No, I'm probably on Pacific time there. So actually a couple more hours to go in trade for the day. Get a little mixed up with the time zone. Spent so many years on the West Coast with the 3-hour time difference. Now I'm here in the Mountain time zone. Got a 2-hour time difference. I still mess that up. Sometimes. So market's closing 1 p.m. Eastern today. So a couple more hours of trading to go. We've got the major indices trading higher. How about that? The Euro's trading higher. You often see that happening here. Now, I talk to a lot of traders, a lot of investors, obviously, in contact with many, many people who are coming out of a more or less a growth trading perspective, which is the same one that I was taught. And we're seeing an awful lot of enthusiasm right now about that follow-through day that we had on Friday. And by follow-through day, I just mean that heavy volume gains on the S&P in particular that we saw on Friday, following through on a rally attempt that had already been underway. And I'm noticing that even a lot of the people who are typically kind of more skeptical have some more conviction about this particular market uptrend. And indeed, we have seen some good action ever since that in the past couple of sessions, at least so far today and yesterday. So that's a good sign. There are a few things to keep in mind, though. We're in a holiday week, so the trading volume is going to dwindle. Obviously, today, being a shortened session, it's not going to stack up when the day is finished as compared to other sessions. But when you look at volume indicators right now, what you'll see is just the level of volume as compared to, for example, yesterday at this point in time. So it won't be, you're not going to see necessarily that the lower volume is not reflecting a shortened session as of this point, but it obviously will at the end of the day. So we'll see that. We've got the jobs numbers Friday. And, of course, in this wacky world we live in, bad news could be good news if the markets believe that it could be more quantitative easing that comes down the pike. It really does. I'm kind of one of those people that tends to sort of snicker about it a little bit, but I know it's very, very serious business, and we did have Hank Mulvihill on here last week giving his perspective on the Fed, and he has a lot of confidence in the Fed's ability to really manage us through this current situation. But I know that a lot of traders really do just watch the day-to-day action, particularly when we have bad economic news, and kind of snicker at the fact that, well, hey, here comes Bernanke again. He's going to back the truck up again. And, of course, we have seen in the past couple of years that it has been a lot of the money printing that has led to a rise in equities, as that money has had to go somewhere. So that's what we are seeing out there right now. Okay, so I'm getting a few notes here in the Tiger Den, something about sound. I hope everybody can hear me, because I'm hearing a signal here. But that's, hopefully everybody can hear me out there. Okay, so what we have today, what I was going to do, as you know, I do bring on a lot of fund managers on the show, and a lot of them talk about what's going on with the stocks that they are investing in at the moment, and what they are looking at in terms of managing the growth. As this is the small cap show, I do tend to bring on the smaller cap managers. I mentioned a couple weeks ago I had a terrific interview with a fellow named Robert Gardner, who is currently of Grandeur Peak. He was the longtime small cap and micro cap manager over at Wasatch Funds, where he had a tremendous record of success over there, and some of his institutional investing clients, the advisory clients, did in fact follow him over to Grandeur Peak, but a number of them are still with Wasatch. So in any case, it's interesting because you hear the term institutional quality quite a bit. And obviously here on the Small Cap Show and in the newsletter which is called Low Price Leaders, which also follows the low price stocks priced between $5 and $12. No penny stocks and nothing that is too thinly traded. I want to see at least some liquidity in some of these names. So this is something that is interesting to me, is to look at some of these micro cap funds, because these are often the ones that you are going to hear some people kind of dismiss as, well, that's not institutional quality. Well, there are institutions that are getting into these. Now, obviously, when you're in the penny stock arena, that's a whole different thing. But on some of these lower priced stocks with micro caps, market caps of, say, billion or less, and obviously the strictest definition of the micro cap is less than that even. I believe it's about 350 million or so. Now, obviously, with a lot of these holdings, that's going to be the time at which the fund makes the purchase, and they're not necessarily just going to sell simply because it reaches a certain market cap. Sometimes they do, but not necessarily. So I was looking at a fund called the Buffalo Micro Cap, and this is an interesting fund. It has a good performance record right now, and I would like to at some point, this is just something that I discovered a few days ago when I was doing a little bit of research. The ticker is BUFOX, Buffalo Micro Cap. And it is something that does have a pretty good track record as of late. And it is something, let me see here, what I'm looking at here. I'm pulling up some of the performance. Okay. So year to date, we are seeing some outperformance there, even on a 1 month level, on the yearly level. So pulling up some of the Morningstar data for the BUFOX, I do see some outperformance here. Obviously, they tend to be, they are more U.S. invested, and this is something that's come up on the show quite a bit as well, where we're seeing a lot of these smaller cap fund managers gravitating towards the U.S. Now, that's not always the case. I mentioned Robert Gardner of Grandeur Peak a few minutes ago, and that's actually, he disagrees with that philosophy completely, believing that there is growth to be had everywhere, and in fact that he continues to see some of the better opportunities happening, not necessarily emerging markets. He doesn't tend to use that phrase, but really he will look anywhere, including the U.S. He sees it as all one big slate that he can write on. So in other words, the whole universe out there, the entire globe, is where he is picking stocks from. And I have to admit that does make a lot of sense, but then we've also had some smaller cap managers who have come on the show and have also said, look, these U.S. companies, they're able to operate their businesses right now with their customer base that's right here. And as we've heard frequently during the weak economy and during some of these market rally attempts in recent months, is that the U.S. businesses, as we know, are fundamentally doing quite well. And I think I've said this a lot lately on the show, but obviously you do have a situation with these smaller companies where they don't have the room to really be trimming the fat in the same way some of the bigger companies do. So they're kind of leaner, meaner operations anyway to begin with. So I want to take a look at some of those. I put the IWM up there on Tiger TV, and you see we're working on our third day in a row of big gains here, consistent with what we're seeing in the general market. So I have to agree, there is reason for the bulls right now to believe that this particular rally has some legs, because just of the good follow-through to the follow-through. That's been working very nicely. And it remains to be seen what happens Thursday, Friday. It'll probably, as I mentioned, we'll probably have some low-volume trade coming up. So let me do this. Let me take the chart off the IWM up there, and let's take a look at some of these holdings from this microcap fund. And the reason I'm kind of interested in this is because, first of all, as many of you are well aware, you often are going to see some of these smaller stocks could be the ones that are leading the way when, as of now, if we are in some kind of new market rally that does take hold, a lot of times you will see some of these smaller names be some of the better performers. Now, I've put one of this Buffalo fund, the Buffalo Microcap, one of its top holdings is a stock I've talked about, although not recently, and you can see why I have not talked about it recently, right up here on a weekly chart. This is Market Access Holdings. It's an electronic trading platform for broker-dealers and other financial institutions. Now, you do see what's happening right up here. This thing has gone into correction right here, trading below key moving averages. So this is something that has fallen off my screen. Now, the fundamentals have been pretty good. We've seen a little bit of a deceleration when it comes to the revenue growth here. Earnings growth holding pretty steady in the double digits, 26% or higher in each quarter over the past couple of years. Now, one of the things here I'm just looking at, let's see, double-digit earnings growth expected this year and next year, 12% this year, leaping all the way up to 32% expected growth to $1.77 a share in 2013. Now, this is, I don't use the fundamentals as a way of making buy, sell, or hold decisions. Now, looking at this, obviously, and I talk about this a lot, that the institutional managers are frequently, they'll hold a stock through these downturns, and I've asked them about it on the show, and they will just, their standard answer is that they are seeing that earnings potential ahead, and they research these companies pretty well. They're frequently right that they do turn around eventually, but for an individual investor, that's an awful lot to have to sit through to wait for that eventual leadership again. All right, 877-927-6648. I'm Kate Stalter. This is the Small Cap Roundup. Give a call. Let's talk small caps today.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
All right, welcome back. This is the Small Cap Roundup, and you just had a little reminder there during the break about the Low Price Leaders newsletter. It typically comes out on Wednesday because of the holiday this week. Be issuing that on Thursday. Let me just tell you where I'm at right now with regard to trades. I mentioned up front that I'm talking to a lot of the advisors, fund managers who are pretty enthusiastic about what we're seeing right now after that follow-through day on Friday and the subsequent 2 sessions. Now, one of the things, though, given that this is such a strange week, kind of broken up with a holiday in the middle of it, that we have this abbreviated session today, and there's some potential for some craziness out there with those jobs numbers on Friday, which is always interesting, because leading up to it, I'm hearing a lot of discussion everywhere about it's anticipated that they will be poor. But how come when that always happens, markets can tank on that news anyway? But as I said earlier, who knows? These days, bad news can be good news, and the expectation of more QE can sometimes send markets higher. So in other words, I'm preferring to only trade as necessary this week. And I'll tell you, in one of my own personal accounts, I did go into some index ETFs, including the IWM, and I did go into a couple of, and this is in one of my other investment accounts, not in the newsletter small cap account, okay? That one, we have one trade on right now that I'm very pleased with how it's been performing, and just keeping an eye on that one. It's been doing very nicely, being keyed into some other good economic news that has gotten some people optimistic. But I'm going to hold off probably on too many more trades, just preferring to see what happens on Friday. And that could be an interesting indicator as well. Don't forget, we'll undoubtedly have lower than usual volume on Friday. I'm reading the Tiger Den. Yes, I agree. Terry in the Tiger Den just wrote, the headlines always say unexpectedly, even though the jobs numbers have been bad forever. That's exactly right. And that's what's always kind of mystifying about this, is how the markets are continually surprised by the news. I suppose there's a hope springs eternal component to it. And for anybody who believes that there is no human factor in the market anymore, I mean, we see these days when people either panic or become exuberant. That exuberance has been in exhibit the last few sessions. And of course, on the downside, we've seen that panic, the human factor in there as well. So in any case, I'm being very, very cautious about the trading this week. Not to say that that couldn't change again next week. And as I said, I did make a few buys in more what I consider an investment account, not the newsletter small cap and low priced trades. Okay? So, a little bit of transparency there, just to tell you what I've done this week. So, wanted to come back here. We've got a couple minutes. I wanted just to look at some of these smaller caps today. It's a great day to just see what we've got right here in terms of some of these institutionally owned smaller stocks. Now, here's one I'm going to put up. The ticker is GTLS, and I know this is one that we've had a few fund managers come on the show and talk about. And this is something called Chart Industries. It's an energy sector play, and I believe that it's something that actually went public. No, I'm wrong about that. I thought it was a fairly recent IPO. No, it is. It went public back in 2006. It was just too long ago to come up on a weekly chart as a recent IPO, but it is indeed a fairly recent IPO, having gone public in 2006. Now you see here that it only recently pulled back from, that's an all-time high right there, that it recently pulled back from. Now this company it's an oil and gas equipment maker. Right now, this is right about at the edge of what I consider the small cap, just a hair over that 2 billion market cap level. And of course, as we see the stock emerge from this consolidation right here, we will see that market cap rise. I want to talk a little bit more about this one. This is an interesting stock and one that I've followed for a while. After this break, give me a call. 877-927-6648. We'll take a little pre-holiday look at some charts. If you want to talk about some of those, I'm Kate Stalter. This is the Small Cap Roundup. Be right back.
If If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Welcome back. We are looking at small caps today. All right, I've got a chart up there for Chart Industries. And this is something that went public back in 2006. And let's see here. This one is just taking a look. Here's a little bullish formation that just happened not long ago. That was in the summer of 11 when the market did correct right here. And I know a lot of people out there, many market technicians, use the double bottom formation, the little twist that the Bill O'Neill and Investors Business Daily methodology employs, is kind of looking at this second leg, undercutting the first. I know not all technicians do use that one, but that's just the one that is really ingrained in my mind to look out for that, and you do see that happening here. And what's nice about this consolidation is that it undercut the prior consolidation right here. So that's something that is looking very bullish. And I do see some discussion in the chat room about people asking for some stocks. I'll come back to that in just a couple minutes. I will address some of the questions there in the den about some of the stocks. Now this here, let's see, then it's rallied to a new high. So that's why this area right here, where you do see a consolidation that undercuts a prior low, that can often serve to really flush out some of the traders that are don't have so much conviction in the stock, or institutional holders that are ready to put their money to work elsewhere. And that's where you see that happening a lot. But it is interesting, isn't it, that you do see with all these fund managers we talk to, it's not necessarily so typical that a lot of these mutual fund managers are going to be unloading in a downtrend already. Right here, as the stock rallied to some new highs, that could have spurred some fund managers to sell on valuation. So that's something that you do see happening. You do hear about that. That can often cause a downtrend. But of course, in this case, you had that summer of 2011 situation where the entire market really was selling off. So this was concurrent with that. So let me just go very quickly. We did have a question about NSM, and I do have a position in this particular stock. I like this stock a lot right now, and just want to show everybody this has been a tremendous gainer. Nothing bad you can say about this one at the moment. Looking at the 5-day moving average for support. And this is just a tremendous stock. Very happy with how this one has performed. And this is the kind of stock that you do find out about in the Low Price Leaders newsletter. Definitely the kind of stock that I am tracking, that I do like. And this has been a solid performer. And it's really funny because I know I get a lot of questions when something starts rallying like this. It's funny to me. People start asking, is this a short? No, it's not a short. It's not a buy right now either because it's too far extended beyond its buy point. But right now, as it continues to enjoy beautiful, perfect support, well above key moving averages, the 5-day exponential moving average, obviously there will be some selling at some point. We are not seeing it as of today. Okay, let me go back to a couple other of these stocks here I wanted to talk about that were from this microcap fund that I was looking at here. And this is Align Technology. And I'm sure many of you have seen the Invisalign commercials, the Invisalign braces. That's what this is. You know, I talk about all the time on the show the medical, healthcare, biotech. I know I talked quite a bit about some healthcare stocks last week when we had that Supreme Court ruling come down. And this is just a sector, not only as the demographics of the U.S. population are changing, aging, and we're seeing more usage of healthcare services, but it really is just amazing, the research and development and the technologies into this sector. It's kind of funny to me. I'll digress here for a moment. It's funny to me when, in some ways, people call social media technology. I mean, I understand it's based on an infotech platform. Or Apple as an infotech. Well, you could argue that Apple is a retail, Apple is a consumer discretionary play, although it is getting more and more of a foothold in the in the enterprise sector. You are seeing increased business use. However, technology is not just infotech. There's a tremendous amount of technological development happening in the medical field. Invisalign braces doesn't necessarily seem so high tech, but it is. It's actually kind of funny today to see some of these people who are wearing a mouthful of metal because it seems anachronistic, really. I met somebody recently, an adult who does wear braces, as she was explaining she was actually not a candidate for Invisalign, much to her disappointment, of course. But you do notice more and more people who are, as adults, getting their teeth straightened, who are choosing some of these newer technologies. So anyway, let's just look at the stock here, what this particular stock is doing. Now, this one, let me just see here when this particular one went public. Yeah, 2001, and it really didn't make too much of a splash. It wasn't on my screens for quite some time, until fairly recently. You've had some terrific revenue growth acceleration in recent quarters. We had 29% revenue growth most recently. And let me show you something. Let me put this up here. If you're watching Tiger TV, I'm going to put this on a weekly chart. And you can see right back, so we had, once again, we had the big correction in the summer of 2011. And then it rallied out of that, flushed out a lot of these holders who no longer had confidence. And of course, if you remember, people were just selling anything and everything at that time. Then you had right over in here recently, you did have another little double bottom base. Kind of hard to see. I'm going to put this over on a daily chart on Tiger TV. Sometimes it's easier to see on a daily. You want to use both dailies and weeklies, and I do use monthlies and intradays as well. For the monthly, to get an idea of the longer term trend, and on the intraday, just to get a little bit more granularity sometimes to see where buying and selling occurred during a session. But you can see the double bottom very clearly on here on Align Technology on a daily chart. You see this let's start over here really. There you had a trend line coming down. I'm indicating it there on Tiger TV, support at the 50-day line. You had a rally attempt, and that rally attempt came, let's see, actually right about the beginning of June. And then it pulled back again, and you kind of sliced that 50-day. But in this case, that was a good thing. Did not fall too far beneath that key price line. This was a good thing because it really just did force the holders who were wanting to give up to get out of there. Then you had this second trend line higher right in here. Now, right now, this is pretty good action. It pulled back again and has been moving higher in tandem with this fledgling market rally that we have. So that's a pretty nice one. This is one that has shown up on some of my screens, not necessarily all of them. Some double-digit earnings gains expected in the next couple of years. And the reason I tend to bring that up is because, as we know from listening to the fund managers and the institutional investors, many of whom come on the show, that's what they're looking for. It's really a whole different mentality than the traders use. They're not looking, some of them do use technicals. I'm running into a few more people who do tend to use some technicals, but it's not really on an intraday basis. They are definitely not trading intraday looking for support and resistance on that type of granular basis. They're more looking at some of these medium-term trend lines like the 50-day. The 200-day tends to play a role more for the institutions, I've realized. I talked to somebody recently who was saying maybe you could use the 200-day line as a stop loss. And I think for an institution, that's a whole different question than it would be for an individual. To me, the 200-day line, as it normally is, far below the 50-day. Let's take a look at this Align Technologies chart that we have right here. And you notice you've got your 200-day is the red line I'm indicating. I don't want it to wait to fall from there if I'm looking at something that's a trade. If it's something that, maybe you're looking at as some kind of buy and hold that you do see that's a larger cap, extremely liquid, maybe a dividend payer, in that case, you might want to treat it a little differently. But for one of these smaller cap or mid cap or even micro cap names, I'm not going to be waiting for it to fall to the 200-day. Okay, so this is an interesting stock right now. Align Technology, that's one that could well show up on some of the watch lists. However, just to let you know, right now this would actually not show up on my screens for the Low Price Leaders newsletter because it's got a market cap of about $2.8 billion, so a little bit out of the screening range at the moment. Let's see here. Here's one that I've talked about a few times before, and it's called Thurman. The ticker is THR, and there we go. Now, this is a pretty recent IPO. I remember when this one went public back in 2011. Yes, May of 2011, this went public, and I'm going to put this up here on a weekly chart for you on the Tiger Den. Now, this is one of these industries, I've talked about this in the past, because this is kind of one of those fun ones that you are never, ever going to hear about this in the mainstream media. First of all, it's very small, market cap of about $667 million, thin trade. Moves about 132,000 shares a day. And let's just face it, so there's a few reasons. First of all, you don't have the investment banks who are out there making money from these particular very small names after the IPO. So they're not necessarily, the sales effort for these particular stocks has just completely dried up after the IPO. So you might have some some fund managers, for example, like the Buffalo Fund that I was kind of using as my starting point today. Fund managers who do a bit more investigation, who are obviously running a lot of screens and looking for some of these names that are not top of mind, not household names. These are the ones who are going to be looking for this. Now, I am seeing here, pulling up some data here from Yahoo. So I do see an increasing number of U.S.-based hedge funds and mutual funds that have bought shares of Thurman recently, so that's a good sign. And it is true, a lot of these fund managers, they are doing their own due diligence. Many of them, in fact, and this is a good thing, many of them take pride in not relying on the Wall Street research, and that allows them to uncover stocks like Thurman Group. Now, this is a very potentially bullish consolidation you're seeing right here on this particular name. So it only, let's see, so it's actually trading below its prior high over here. I want to pull this up on a weekly chart. This is just one of these little unknown stocks that I've liked for quite some time. You know, you could consider this to be one of those double bottoms where you had the second leg there undercutting the first, but it's kind of a little sloppy the way it zoomed up so quickly off of the right-hand side here. Now, this is one, though, I want to say you could consider this in buy range at the moment. Just be careful about that lack of liquidity, that 132,000 shares. That's why this one has not shown up on all of my screens. I typically tend to like, even in the smaller cap space, stocks that do have a bit more trading volume in that 300,000 shares a day on average or more. But there are some exceptions, of course. You just have to be very careful. So by some measures, and there's a couple different ways you can analyze some of these formations, by some measures you could consider this in buy range at the moment because it surpassed this intermediate high point. It hit resistance right there where I'm indicating and prior over there where I'm indicating. So in that sense, it could be in buy range, but if you're using the 5-day exponential moving average, it's a little bit beyond that. I'm going to talk about that a little more. We've got one more segment to go after this. I'll come back and talk about that some more. I'm Kate Stalter. This is the Small Cap Roundup.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
On another show that's just raced by, going into our final segment today. Let's see here, checking. We still have all the indices trading to the plus side, maybe a little bit off of earlier levels, I believe, which is interesting because going into tomorrow, obviously, when the U.S. markets are closed, but we'll have trade around the world, particularly in Europe. So it'll be interesting to see what kind of reaction there is going into the final hour of trade today. If anybody wants to, if the professional traders want to take some of their holdings off the table ahead of a day when the rest of the world is open and we are not, it'll be interesting to see. Not only markets open overseas, but they'll be open for business. So, there could be they could save some of their sneaky little developments for the days that they know that we're all hanging out having fun on a Wednesday. So it will be interesting. So one thing, let me see here. I wanted to talk about a stock that actually my friend G7 there in Tiger Den brought this up. And if you were listening to Tom's show yesterday, I was guest hosting in the second hour, and I'll be doing that again on Friday, by the way. Guest hosting for Tom at the 5 o'clock hour on Friday. Looking forward to that. I had my old friend Ken Hoover, my former IBD colleague, whom I've known for many years. He was the guest in that hour. That's his usual slot where he comes on and talks about stocks with Tom. And Ken Hoover brought up a stock that I have been watching as well, Coinstar, CSTR. And some of you who maybe are following what we're doing in some of the newsletters, you might have been aware that this is one that I'm following. Now, this is pretty interesting because it actually did just jump out of what I consider the small cap market range there. It's got a market cap right now of a little bit shy of $2.2 billion. Great liquidity on this one, about 1 million shares on average moving per day. This one actually, again, depending how you look at it, it could be in buy range at the moment. It's just a little bit above its all-time high. Now, let me put this up here on a weekly chart for you in the Tiger Den right there. Now, you see that this is one that struggled. And actually, the reason I brought this up is because G7 brought up Netflix. And just for fun, just to be a glutton for punishment, let's just take a look at a Netflix chart, and then we'll go back to a Coinstar chart. Yeah, there's Netflix. Let's put it up on a daily just for fun. I mean, it's getting a nice little bounce now. So I could see where day traders, shorter-term traders, looking at some of these indicators, where this could be an interesting proposition at this point right now. But what's interesting to me is the way that so many of the bigger picture analysts had it so wrong about Coinstar. People were saying, who's going to go out to a kiosk when you can just stream your movies? But maybe what's happening here is that people are actually going out to the movie kiosks as needed because they don't want to pay for a monthly subscription that maybe they're not going to use regularly. If you just go out and rent a DVD from a kiosk, once a month, once every couple of months, then sure, that's a more economical proposition than paying a monthly subscription fee. So just some interesting things there. Coinstar is an interesting stock. It's one that I have been tracking and I'll continue to track. And just glad to have a chance to have another look at that today. That's a wrap. Speaking of movies, I can't believe today went by so fast. Have a fantastic 4th of July, everybody. I will be back here on Thursday and sitting in for Tom again in the 5 o'clock hour Friday.